This podcast is intended for investment professionals only. All investing involves risk.
Hello, and welcome to Elgin Talks. Regular listeners may recall that in February, we released a podcast that introduced commodities as an asset class. Well, today we're going to dig a little deeper to learn more about the intersection of geopolitics and commodities, how the transition to clean power is changing demand patterns, and the outlook for a few specific commodities, both in the near term and longer term. I'm Harry, and answering the questions today are Elisa Piscopiello, a senior ETF analyst here at Elgin, and Francisco Blanch, who is managing director, head of global commodities and derivatives research at Bank of America.
Thank you for having us. It's great.
Hi, Harry. Thanks for having us.
So one of the things that I find fascinating about commodities personally is that they aren't just an abstract notion. Every time I pour a coffee, fill up my car, or use the internet, I know that I'm interacting with them. Francisco, can I start by asking about your personal journey in the commodities space and what led you to the specialism?
Sure, Harry. It's been a long journey. I've been doing this for almost a quarter of a century at this point, and kind of go back to my education as an economist and also my focus on political science. When I started my career at Goldman Sachs, I was kind of looking for a job that would bring in both disciplines into one. I mean, politics and economics, and commodities really does that, right? One of the few areas where if you like finance, if you like economics, if you like politics, it really all comes together. And that's kind of how I got into the asset class. And then I really enjoyed it. So spent a few years at Goldman Sachs and then moved over to Merrill Lynch in the mid-2000s to actively lead the team and build what we have today, which is one of the best known teams in the street when it comes to commodities analysis. And then following that, spent a lot of time also doing a fair amount of work on how to help investors access commodities and asset class in a better way. In my early days in my career, I got to learn about some of the indices that were available for investing, like the Dow Jones AIG and the GSCI, the Goldman Sachs Commodity Index. And when I moved to Merrill Lynch, we created new access products, new access tools that we thought were much better vehicles than what was available back then. And we've continued to work with investors, with asset management companies, to help them design commodity access ideas that make more sense than the traditional vehicles that were designed in the early 90s.
Thanks, Francisco. That's a really fascinating journey there through commodities. Ellie, how about you? And I guess, can I ask you, are there any commodities that you'd highlight as being particularly interesting for personal reasons?
Definitely, I really like, as Francisco said as well, how with commodities, how we need them for everything we do. And I studied economics as well. So I really appreciate also at work and as well as my daily life to understand how commodities are driving the economy. And if I can really pick a few that I like, I would say personally, and from a work perspective, I would say cocoa and coffee. For obvious reasons, love them every day, and found it crazy that actually until the mid-1800s you couldn't have a chocolate candy because the process of extracting butter from the beans still hadn't been invented. So I feel lucky or unlucky, depending on the perspective, that I can enjoy cocoa that way today. But these are good examples as well to understand how these inputs, these commodities are driving the economy for the countries that produce them. And it's not every country in the world that produces these commodities, cocoa and coffee, and how their prices are quite, I would say, unrelated from other economic forces. So we have commodities like oil and gas, for example, whose prices are influenced a lot by geopolitics. For cocoa, coffee, or agricultural commodities in general, we really see some different aspects like weather influencing their prices. And for these, we see production is concentrated in tropical areas in the world, and we have seen recently a really high increase in price, a really high increase in volatility for these commodities. So it's nice to appreciate, for me at least, appreciate these commodities from an everyday life perspective, but also get to work with them when I'm at work. And then I think if I had to pick another, that would be natural gas, and that's more from an economics perspective, what we have seen in the past years, especially in Europe, after the beginning of the conflict between Ukraine and Russia, really what's happened to the price of this commodity, and really critically, even in context of energy transition, which we might explore later today, we see natural gas still playing a very big role in global energy consumption.
I think I'd have to nominate coffee beans as one of my favorites as well. In the introduction, I mentioned the intersection of geopolitics and commodities. Francisco, I wonder if you can give us some examples of how you've seen that intersection play out over that quarter century career that you've had so far in the space.
Yeah, look, it's been fascinating to watch the unfolding of different trends in both global economics and global geopolitics in the last few years. And one of the things about commodities, right, that I think make them so interesting is that when you get the newspaper out in the morning, and if you like reading the news, it's kind of hard to skip on a lot of news, right? Because commodities touch so many things, and so many things touch the commodities complex, right? So, for example, this whole Hamas-Israel situation is incredibly important for the commodity markets. And one of the things that perhaps have gone less noticed is that the Houthi attacks from Yemen on shipping infrastructure in recent months have created a much longer supply chain for a lot of commodities. So we've kind of lengthened the pipeline, so to speak, which means that you need a lot more operating storage, and therefore there's a lot more, if you like, oil in the pipeline or gas in the pipeline or goods in the pipeline, because it just takes so many more days to get things to their destination. So we kind of built incremental storage, a bigger buffer throughout the longer route. That could change very quickly if we have a ceasefire. So we are reading the news on Hamas and Israel with great attention, not only because of obviously the humanitarian challenges that we're facing, but also because it has a huge impact on the prices of all these commodities that we track on a daily basis. So that's just one very recent example. But obviously the other thing that happened in the last couple of years, which I thought was also incredibly important, right, for the commodity complex and for global energy generally, was the Russia-Ukraine war, and the particularly the blow up of the Nord Stream 1 and 2 pipelines, as well as the breakdown of the relationship between Russia and Europe, which has, frankly, if you look at history, right, Europe for decades upon decades has been very, very reliant on Russian oil, gas, and thermal coal. And all of that came to an abrupt end in 2022. So we had incredible volatility across a very broad range of commodity markets. We were at the point during parts of the year where we wouldn't know if we'd be able to heat our homes in the winter, or cool our homes in the summer, or drive our cars, or the industry, as a result of that, had to shut down. So many people lost their jobs in industry because of the conflict. So beyond the humanitarian aspects of it and the loss of life, which obviously is very dramatic and is obviously we are all horrified by, but there is the economic element of it, and it has, like I said, a real consequence in your pocket, and force governments to make decisions on, for example, on subsidizing certain sources of energy, putting price caps. Lots of stuff happen regularly that impact commodity prices. And then there's, of course, elections, right? Different politicians have different views of the world, and whenever they come into play, we see things like America pulling out of the Paris Climate Change Agreement, or America getting back into the Paris Climate Change Agreement under one president or another, or the Inflation Reduction Act, which is effectively a piece of legislation that tries to address climate change, which is also impacted by commodities. So at the end of the day, commodities are at the very heart of our economy. So it's very difficult to step away from them. And as I said, what's fascinating is really you have to be in the weeds of almost every major political, geopolitical event going on in the world today, as well as most economic events, because that's ultimately, whether demand is going up or down, is what drives the price of the underlying raw material.
Thanks so much, Francisco, for that sweep of history through a lens of commodities, if you like. Ellie, you touched earlier on the impact that the transition to clean energy is having on commodities today and what it might have in the future. How do you see this playing out over the decades ahead?
Well, I see a strong demand for new type of commodities that I would say we haven't maybe thought about as much until today. So we see traditional indices really focusing on energy, industrial metals. But in the past, I would say decade or so, we started to really switch from fossil fuel-based energy to clean energy. And that is adding demand to new type of commodities. And that is because I think now it's quite obvious governments, industries, they really realized it's quite obvious we need to shift. We need to produce more clean energy. And the increase in capacity, economies of scale, that has translated in lower costs. We have seen in the last decade, costs for electricity generation from solar energy have decreased by almost 90%, for wind energy by about 60%. And countries are adding capacity all over the world. And we need different types of commodities. We need solar panels, so we need aluminium for its sort of resistance properties, tin for the coating, so anti-corrosive properties. Then we need electric vehicles. To produce more EVs, we need more batteries, and so that means more metals. So new inputs again, more lithium, more cobalt to make these batteries last longer and be more efficient. We need to produce green hydrogen, and that means we need to use electrolysis more. So that needs new metals like platinum again. So lots more new material, more commodities that haven't been that central, as I said until today. And some of these metals, some of these commodities, they are really, their demand comes predominantly from clean energy production. And for firms, for miners, it takes really a long time to create new mines, make them operational. This has really high costs. And so this is putting a lot of pressure on the prices because of these supply and demand imbalances. So we see new commodities overall, like the ones I mentioned, tin, platinum, becoming more, I would say, important than commodities on which we have relied until today.
Okay, thanks, Ellie, for that sort of long-term perspective on what might happen over the decades ahead. Francisco, I wonder if we can shorten the time frame a bit to think about some specific commodities over the next 12 months-ish. Are there any that stand out? One I'm thinking of, unsurprisingly perhaps, is gold, because it's received a lot of coverage in the press, having hit some record highs pretty recently. Do you see that metal rising further over the year, or are there any other metals that you think are just as interesting?
Sure. On the gold side, I would say that obviously prices have pushed higher as a result of fractured geopolitics. Whether it's Ukraine to the Middle East, the freezing of Russian central bank assets has been a trigger for official gold purchases around the world. Also, a depressed stock market and a depressed housing market in China has encouraged flows into the yellow metal from retail investors there. So large Chinese investment purchases, steady central bank buying, and Western investors buying optionality have all played a role in the decoupling of gold from U.S. real interest rates and the U.S. dollar itself, which was the prior anchor for the yellow metal. Having said all that, we've seen traditional segments like physical ETF holdings languishing, and we've also seen, obviously, a trend both in Europe and the US that have pushed investors into bonds and into equities. And I think the big question for gold going forward, and we are bullish, by the way, but I think the big question for gold is when interest rates are ultimately going to come down. Because if you look at the picture I've painted, right, it really so far has been a central bank story. And you might say, why are central banks buying gold? Well, they are buying gold because Russia invaded Ukraine with $700 billion of assets in reserve in their central bank. And a few months later, they just had half that money because Europe and the US froze their European government bond and US Treasury holdings. And other central banks have taken notice and realized that we live in a very fractious geopolitical world, and that holding too many US Treasuries or too many European government bonds might be risky. It's also interesting, for instance, that China has been pushing to get government central banks to hold reserves in yuan, although the yuan is a non-convertible currency. And this brings us back to gold. Why are people holding gold? Because there is no alternative, right? It's a TINA story. It's a buy the dip TINA story. And that's what we see in gold. Other metals, of course, are interesting, and they're interesting in as much as they link to the energy transition. Silver, for instance, we are quite bullish on, and I think other metals, like for example, copper, aluminum, are critical in the energy transition. But there are many interesting potential uses unfolding in the metal space that will continue to pressure, we believe, both industrial metals and precious metals higher. Even if in some cases, like for example, platinum and palladium, these are weak metals today from a pricing perspective. We think in the future they'll play an important role in technologies like hydrogen. So there's I think the key message from my perspective is that the energy transition needs more metal, and needs more metal because we're moving from molecules to electrons. And that's what you really need to keep in mind. And moving to electrons requires the cables to move those electrons, requires the tools to generate those electrons, and the tools to store those electrons. So production, storage, transmission, all of that, right, requires an enormous amount of metal. Unlike in the case of molecules where maybe there's metal required, of course, but a lot of it is really much more around steel, infrastructure, and like heavy, just pipelines and that kind of stuff, right?
Well, thank you so much, Ellie and Francisco, for talking to me today. I feel like I've learned a huge amount about commodities and the huge width of different commodities and their important role in the ordinary economy throughout history. And thanks also to all of our listeners at home.
As a reminder, this podcast is intended for investment professionals only and shouldn't be shared with a non-professional audience. The views expressed in this podcast are those of Legal & General Investment Management Limited, as at the date of publication. This podcast is for information purposes only, and we are not soliciting any action based on it. The information discusses general economic, market, or political issues and/or industry or sector trends. It does not constitute research or investment, legal or tax advice. It is not an offer or recommendation or advertisement to buy or sell securities or pursue a particular investment strategy. Assumptions, opinions, and estimates are provided for illustrative purposes only. There is no guarantee that any forecast made will come to pass. No party shall have any right of action against Legal & General in relation to the accuracy or completeness of the information contained in this podcast. Where this document contains third-party information, the accuracy and completeness of such information cannot be guaranteed, and we accept no responsibility or liability in respect of such information, not for distribution to any person resident in any jurisdiction where such distribution would be contrary to local law or regulation. Copyright 2024. Legal & General Investment Management Limited is authorized and regulated by the Financial Conduct Authority. In Hong Kong, this material is issued by Legal & General Investment Management Asia Limited, regulated by the Hong Kong Securities and Futures Commission. For full terms and conditions, please visit our website. To find more content, you can check us out on X, formerly known as Twitter, LinkedIn, and our website.